What's going on, everybody? It's your boy C-Zar, and in this video we'll be talking about Bitcoin, BTC USD. It is the 15th day of June. We're halfway through this month already, you guys. Can you believe it? And we're soaring to prices that are at $66.4 thousand. We've hit a high today of 66.6K essentially, with roughly 11 hours left in the day. Hit that like button, subscribe. Thank you all for being here, and let's get into it. I must admit, I did not expect that we would break through this level here. I did expect that we'd come down back below 62K, maybe even below 61K. That was my expectation. And we've seen this move up a little bit more tenacious and a little bit faster of a pace than I expected. In hindsight, after all this dropping, it kind of makes sense that we'd see a little bit more of a robust movement. I was expecting something like this back here, but then whenever we moved down like this, I thought maybe we could see a lower low, double bottom. We were still kind of waiting for that, and well, we've gotten this last little like 2% move up incorrect, and that's okay. This was still a target area that we had on the books. It wasn't the proper target, but it was still something that we were aware of as a possibility. We look at this here as a high to a low. I guess this was the proper target. When I say it wasn't the proper target, it wasn't my proper target, but this was the proper target. We look at this here, getting above the 236 like this, typically you actually would continue to the 382, the yellow line there. Sorry, I don't know why it continued to do that. Right here, 67.2K. This is a possibility. And I want to look at the 1 hour time frame to kind of help define and bring to life that possibility, because there's some stuff going on here that's kind of interesting. We look at the 1 hour time frame, and you can see that as you're moving up, volume was decreasing. We saw volume decreasing. And typically whenever volume's decreasing, especially as you're getting to these points of resistance, you would come down. But you didn't come down. You continue to move sideways, and you even continue to move up. You're disrespecting this point of resistance, and you're just flirting with it more. Volume started to come in again over the weekend, which is really interesting. We actually had a weekend pump that persisted into today, Monday. Sometimes, and oftentimes enough, whenever we pump over the weekend, we move up on Saturday and Sunday, which we did do. We moved up on both Saturday and Sunday here. Sometimes those moves carry on to Monday, Tuesday. It's Monday now. We've got 11 hours left in the day. Tuesday, we have a full day tomorrow. We really could see 67.2K as a price target. We look at this. I haven't refreshed this, so this is actually from like Friday, I think. A lot of shorts get cleared out at 65K, but we refresh this. Oh, come on! I was logged in. Why does it log me out? Can I just stay logged in? I don't want to log in and everybody sees my email. Log in to unlock full data. You know what? Maybe I'll just do this. I don't think you guys can see it now. Let's see. There we go. You've successfully logged in. Good. Okay, hold on. Let's see. I'm going to double check and make sure. Yeah, you guys can't see it. Okay. I just want to see the data. This would be more effective if you paused the video and then you played it back to exactly where it is right now. You know what I mean? Because I was trying to show the jump from where there we go. I think you guys should be able to see this now. You've successfully logged in. Funding rate, liquidation map. That's what we want. Sorry, it's taking a second here. Unforeseen circumstances. We look at the past day. Shorts have been decimated. Longs are piling on, but people are still going short, guys. They're still like cumulative total of $700 million in shorts, roughly, or I guess $500 million in shorts right here. $500 million in shorts that gets liquidated at 67.5K, 67.1K, somewhere in that area. We look at the 7-day time frame. Shorts completely decimated, but there's still this island right there to 67.3K, and that's about, on the last 7 days, about $500 million. Over the last 30 days, there's still a ton of shorts. Longs are now taking over versus shorts. Longs have taken over, but there's still this little pocket here at 67.3K, and I mean even going all the way over to about 69K. There's a solid pocket there. So it is completely possible that Bitcoin not only rallies to the 382, but rallies through the 382. That does happen. We have seen that happen plenty of times before. And typically with the 382, you actually don't expect to stop right at it unless you're in a very bearish environment, which, to be fair, we are. oftentimes you would expect that you wick through it and then you close below it. So something probably above 67.2K is coming our way. Much easier to say that here than it was here, but whatever, you know, here we are. Probably moving up. Now, you can move down. In the meantime, we could move perhaps back down to 64K and then move up. I think we did that, though. I think that's what this little last 3 days was kind of flirting with that area. And now we're ready to move up. We're probably going to hit that 382 area, get people excited for the new week, get people excited for this month of June, and then we'll sell back off, likely either coming back down here or even back down to these lows overall. Again, the main theme from this point here is not that we're going to be doing this. We're not in an uptrend. It's that we are in a sideways, volatile, what goes up comes down, what goes down comes up kind of phase, much like what we saw back here. Going back to the 1 hour time frame, the RSI looks strong. The stochastics look strong. You've been overbought for some time. You've been overbought for a little bit of time here. So again, 66.6K now. We're moving up. It's fun. But if we move down a little bit, don't be intimidated by that. I do suspect that we will see prices go to 67.3K. With this kind of initial movement to start off the week and over the weekend as well, moving up like this, I do expect to see some volatility, some short-term price action that might shake out the markets. We could see just like 1 hour dump back down to 66K or something like that, even a little bit lower. We could see some kind of crazy dump, and then we continue to move up, convincing people that this is the top or whatever area is the top. I don't know what's going on with this. It won't let me. Stochastics have been overbought for a second, so again, maybe cool off. Whenever we've been overbought before like this, we saw a little bit of a cool off phase, some kind of selling off point here. I thought this was the high. I thought we were going to move down from there, and we didn't. We actually continued to move up. Whenever we got overbought here for a while, you could see same thing. We had a little bit of a move down. We stalled out for a while, but then slowly but surely we continued to climb higher. We do have bearish divergence on the MACD. 4 hour time frame. The 4 hour RSI is beautiful. It's absolutely beautiful. You've got a very nice trend going all the way up here. You did break that trend a little bit. But really, you've got a very nice trend going all the way up to the overbought zone. Typically, trends like this do end in the overbought zone, just like a trend like this will end in the oversold zone. But as you can see here, you got oversold quite a bit of times for quite a bit of time, and here you've only just begun getting overbought. So last time we had a nice uptrend like this, we were overbought for a solid bit before, really for a very solid bit before we actually started to turn down and get sour. So it could be a while. We could see this move progress higher. I'm standing with the idea that we probably don't go too much above 68K. 67.3K, sure, we can get above there, but I don't think that we get too much above 68K, if at all above 68K. There's this knot right here, this little knot right there in the price. We moved straight down, but then there's this little knot here for about a day. We could find resistance right at the top of this knot, whether it's on a closing basis or a wicking basis. That could put us, anywhere from 67.2K to 68K. It's the exact range that we're looking for. So that ties up well with the fibs, the 382. Makes sense in this overall bearish environment that we might find resistance there. The 4 hour MACD had bearish divergence. This was something else that really convinced me that we were going to see some movement down. However, we had a false cross to the red side. We bounced, and this is a really bullish signal right here, starting to build momentum even through what this divergence was. That's a very positive signal. So again, I don't think this move stops here. Stochastics look phenomenal, bouncing right off the 50. All good things. You're really doing all the right things. The daily stochastics look vibrant. You're right at the 50. This is an area that you could find resistance at. We found turbulence in this area before. You've crossed green on your MACD, and your daily RSI has broken out of its downtrend. You're at the 50. This is a point of contention, to be completely fair. We could find some resistance here. I wouldn't be surprised, maybe we close today around here or something like that. Or maybe if we close today lower, tomorrow we make our move up to the 67.3, 68K area, and then we close back down low enough where it looks like we're rejecting the 50. I wouldn't be surprised if we saw something like that. And with that, we really could see a lower low relative to this closing low here and get some bullish divergence going on with the daily time frame. Mark my words, I do believe that a lot of this move so far that we've had, I think that we've got a little bit more to go, but I do believe that we're going to see a lot of it come back. We probably do go back below 63K, 61K, somewhere in that area there, if not even lower lows overall. It is still completely possible from here that we do see a lower low. Everybody is celebrating, saying the bear market's over. We've got the double bottom. This is it. I don't think so. I don't think so. You don't get, if this was a double bottom, you don't get a stronger reaction on your first bounce and then a weaker reaction on your second bounce. You don't get more volume on your first bounce, and that's at least not in my experience. That's not what we normally see. Typically, if it's a double bottom, you get that secondary bounce is a little bit more vibrant. But there's still time. This bounce went all the way up here. If this bounce can go higher, then I guess it is more vibrant. Even if it takes more time, I guess it is better. But just so far, to me, it doesn't really resemble what I would think of it as a double bounce, other than the fact that right now it appears as though we've had a low here. We've still got a lot of work to do before we can provide that this is a double bottom. If it is a double bottom, we'd have to get above this high point, and if it is, I mean that's the end of the bear market, guys. That would be the end of the bear market if we got all the way up here to about 83K, 82K, wherever these highs were back in May. But that's not my suspicion. That's not what I'm calling for. I very much do expect that as July, August, September comes along, we will see lower lows. We're just enjoying a little bit of upside right now from this downside volatility. We're seeing a little bounce back. There is one more thing I want to go over. We look at the ribbon on the daily time frame. Okay. MA exponential ribbon moving average. Since the beginning of this bear market back in October, okay, when our daily ribbons really started to falter and alter and flip bearish here, the very first time that we found a low and we came back up as we were in the very beginning phases of our bear market with lower lows and forming this lower high, before we got to this high, we found resistance right here on the ribbon. We literally got into the ribbon, found resistance right there at the ribbon, and then rejected down. We came very close to these lows, actually. We gave back most of this move. And what did we do, actually, from there? From a low to a high, we went right down to the golden ratio zone, just as a point of reference. We did go through it. Okay, you did find a high point above it. Then we found our next low point down here. I mean, you found a low here, and you did find resistance right at the base of this ribbon again, but you rejected all the way down. I think this is all part of the same move. So from this low, whenever you came up, you're very, very far away from the ribbon here. Okay, very far away from the ribbon here. Whenever you came up, you found direct resistance at this yellow line right here. I think that's the 20. Yeah, it's the 20 EMA on the daily. You found direct resistance right there. And then what did you do? You rejected, you came down a good bit, you retraced most of that move in a very short amount of time, went back down to the golden ratio. That's 2 for 2 on the golden ratio there. Inevitably, you went higher. Inevitably, you did top off, above the ribbon. You topped off above the ribbon, which is pretty impressive. But the ribbon did not cross. You came back down. You found a low. You found resistance at the bottom of the ribbon again. All the way down here from this low, whenever you finally came up to touch this ribbon, it was actually at a lower high, but the ribbon had time to come down. You finally touched this ribbon for the first time in a while. You got very far away from the ribbon again. By the first time that you touched the ribbon from the downside here, you could not really get past this 20 EMA on the daily yet again. And then from there, from relative low here to relative high there, you retraced back to your 886. That was a very deep retracement in a very short amount of time. You gave back most of this move. You still had a higher low, just like every other time. And then inevitably you topped off just above the ribbon, just like every other time. Came back down, and from this low, we found resistance right here, again, at the very base of this ribbon. And we gave back most of that move. From a low to a high, you pulled back to the 786. Golden ratio, 786, 886, inevitably going up. We did cross the ribbon bullish, which is kind of nice here. Whenever you cross that ribbon, that should have been a signal that we would continue moving up. Here we are, all the way down at this low, very far away from the ribbon, right? We've seen a lot of separation from the ribbon here, and we are now interacting with the lower band, the lower EMA, which is right there at about 66.7K. Now, we could go a little bit higher, but again, this second level, the second EMA is at 67.7K. I'm saying 67.3, 68K, somewhere in there. I think that's more than fair. And then from there, we likely do pull back. Imagine that we go, let's just say 67.3, because that's where the 382 is. Imagine that we go there, we wick a little bit through, as we've seen it happen a couple times. We wicked through it here. We stopped right at it here. We stopped right at it there. We did wick through it over here on that first little bounce. Anyways, we do that. The golden ratio would be at 62K. We move up higher. Let's say this move goes up above 68K, above my expectations, whatever, and above what we've seen so far in this bear market. It's a little bit more of a robust move. Let's say we go to 68.3K. That golden ratio is still below 63K. So no matter how you skin it, we're probably going to go below 63K, if not even lower at some point. And I do have my suspicions. Every single low that we've had so far in this bear market, whenever we find a low like this, a macro low, it's not necessarily a macro low, but a more intermediate low, we do maintain higher lows. We do maintain higher lows here. We maintained higher lows. We didn't until we broke through and we saw our next phase down, right, just like this. I'm a little bit suspicious if we're going to continue that now. It seems like it's expected. It seems like it's set up that way. So then if we were to see a lower low, that would be different than anything else. People would go max short and freak out down here, calling for much lower prices, and then we might move up. This would be our double bottom, relatively speaking. We'd probably have a double bottom scenario play out, something like that, but it might not happen. We have, in another frame of view, we have been forming higher lows every single time that we found a significant drop low like this. Significant drop low, we got higher lows, right? Significant drop low here, we found higher lows before breaking down, and then we started our next move. So maybe we continue that trend. But I think I've given you guys enough to think about. I have talked my mouth off. I'll see you on the next one. I hope you enjoyed the video, and if you did, hit that like button, subscribe, and thank you all for being here. Take care. Bye-bye.